Hi, and welcome again to another edition of Market Analysis for today, July 3rd of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets. We're about, 40 minutes prior to the U.S. session open. And what an opening we are going to have. Today, we receiving the non-farm payrolls because tomorrow is the 4th of July, so it'll be a holiday in the States, no trading. I think we'll be closed. And the market was actually bracing for a negative number, but it came out quite strong, 147,000 non-farm payroll jobs came in. Unemployment at 4.1%. So this obviously throws a conundrum on Fed, since he also has a pressure from the president to cut interest rates. But with this unemployment rate at 4.1, it will be difficult for the Fed to obviously to fold and give in to the president's demands of cutting interest rates. Now, if there was to be an interest rate cut in July, the Nasdaq is very fond of rate cuts, so we could most likely will see a continuation to the upside. But this, anyhow, for today, how we're reading it, or how we want to speculate about this number and being really the last day of trading in the U.S. today, so it'll be a long weekend. We've seen here the level of resistance that I have placed. Obviously, I'm using that all-time high. We actually picked our heads above that by basically just a couple of pips, really. But anyhow, the whole scenario will be if we are going to continue with this momentum to the upside. So let's take a look at an hourly chart, right? And in this hourly chart, we've seen how the market has been basically flattish until the news came out. It came out with a positive momentum to the upside, and now is just retracing or pulling back. Will this pullback be obviously profit taken when the U.S. opens? Will that obviously drive the market higher and looking for a continuation to the upside? And it could be, obviously it could be. So the sense, the other side in this chart is really below the overbought territory, and we could most likely come in and give the odds of probabilities to the favor of moving higher, and perhaps come in and just come in and fluctuate to the upside to touch that 20,000 marker, a strong psychological marker for the market, and leave that there, just touch it, and then just it'll do a reversal. So basically, my speculation, one of my things, is the market to continue to trade higher, break that or fluctuate above the level of resistance, do a throwback, which was resistance now of a support, and from here rebound, reverse, and continue trading higher to touch that marker, and from that marker then just do a continuation to the downside and perhaps close somewhere around 2980. Okay, that could be one of those scenarios. Now the other one could be, well, the market did touch that all-time high, and then it will just continue to retrace, just to do a pullback. The 20-day moving average being a dynamic level of support, okay, which is the minimum of the Bollinger Bands, but the bands are being squished, right? So these bands, obviously, we are seeing how the market could obviously come in and break out of that, and then obviously create a 2 standard deviation because of volatility, and that expansion of the bands could probably take us towards that marker, that 23,000 marker. Now let's take a look at a 5-minute chart and see where the market is. In this particular case, we come in and use the trend fib extension, and let's see if this movement in this part right here can be figured out, and we could come in and perhaps use the golden ratio, right, the 0.618%, to be the marker where the market will come in and obviously take a look at reaching. So that could be one of those places. Now, I want to show you something. This is the standard template, but I have my, oh, it's not in here. Okay. All right, so never mind. So basically what I'm trying to say is we could come in and use the 0.618% as a possible level where the market will come towards it and find that. Okay. Now, as far as retracement goes, that's right, because as far as retracement goes, well, let's use the retracement tool. So how much of this movement will it retrace? So let's just measure that out. And here it is, my levels. So basically what I want you to take a look at is the value of the 61.8%, which is the golden ratio. The market has already fluctuated below that and actually gone into even deeper numbers of retracement. But if we follow through, you see that how the market, this candle has actually hit the 0.786% of the Fibonacci numbers. And from here, we could come in and speculate that the market will continue to move right towards that high or towards the golden ratio of 0.618. So here's the level where speculation using the Fib retracement tool can show us that the market from this movement, this retracement that is done now after hitting this particular level of the Fibonacci extension tool, retracement tool, sorry, will continue to now will continue its momentum to the upside and look to reach that 0.618%. Okay, so basically it's right below the 23,000, and it was right below the 22,980 value where I said we could probably come in and close the day after touching, if we touch it. So that's obviously the my way to look at. I'm gonna say in the 1 hour chart, so we can come in and take a look at other assets and just figure out where we're going. So all right, so we have here the S&P making nice move to the upside. So 6,300. It just tells you. So from here, right from here on, let's use that extension tool and measure this movement from that previous low, right? That's the lowest. That's the lowest point that we've seen to the back. Looking back, at least two candles to the right and two candles to the left. We see that that's the lowest point. That's the extension. This movement, where will this candle move towards extension? So we're saying that 0.618, sorry, is where the market usually, where the golden ratio comes towards. So we're going to be using that level. Now we can come in and use for support the 20-day moving average and either the lower boundary band or the 50-day moving average as probable levels of support. So there we have our levels. Let's do the Dow. Wow, what a strong spike to the upside. Nice parabolic movement on the Dow. Well, the Dow in all scenario is not where obviously we wanna say, okay, it's getting closer to its all-time high. So I'm gonna use the 50 and the lower boundary band. 45,000 is gonna be that first level of resistance. Okay, and let's see if we be able to touch those psychological values for it. Now, crude oil is actually also expanding. It broke out of that scenario, that ranging that it was all throughout last week, and it did a breakout to the upside. Now we're going to be seeing over the weekend OPEC Plus meeting in regards to their production, where the quotas, what they're going to come out with, are they going to just really just really send a lot of crude oil into the market. It just flood the market. So basically, we are seeing how the market right now in these 2 hours is just ranging sideways, consolidation. It has bounced off the 20-day moving average. If we do happen to see, obviously, there's a correlation between NASDAQ and crude oil. If we see crude oil just start trading lower, breaking that 20-day moving average towards the lower Bollinger Band, we'll see the NASDAQ moving higher. Okay, but if we do see the crude oil continues to move higher towards 68, it'll put pressure on the NASDAQ, and we'll probably see a fluctuation to the downside. But obviously, with the dollar index also spiking after this news, it'll put pressure on commodities, and we could probably come in and speculate that since we already have hit twice, basically this level of resistance, that the market will trend lower. So looking to sell the market, how much lower? I'm gonna leave $66 as a possible level of support, and the lower Bollinger Band as my second level of support for crude oil. Nat Gas. Well, Nat Gas is actually recovering from a pretty lower fluctuation. So I'm gonna use this particular double bottom here as a level of support, and then since we are already above that level of resistance, I'm gonna use 345-ish and then 348. I don't think Nat Gas will do much more of a fluctuation to the upside. Actually, I think this is just basically a knee-jerk reaction, and it'll continue to move lower. Then we have gold. So gold, after the numbers came out, took a hit. Right, it did took a hit. Dollar index actually recuperated. So 3310 and then 3,300 will be that level of support. I'm still gonna leave that particular level of resistance. Actually, I'm going to actually make it 3360, and then the upper Bollinger Band. Silver. Well, silver, it did fluctuate above that level of resistance we have placed, so need to update that. I'm gonna use basically this swing high here, and then bring up my levels of support to the 50-day moving average, and then the second one will be the lower Bollinger Band. So it's retracing, it's pulling back. Copper, so selling. Copper, actually, I'm gonna look at the $5 marker for second level of support, and then 505 as my first one. Resistance, I'm gonna use this 2 higher wicks here as a possible level of resistance. It is trending lower. Obviously, is the 20-day, the 50-day moving average is being violated right now. So momentum to the downside is being created. Bitcoin, after making a comeback and fluctuating above 110, is retracing now. So we need to obviously update that. I'm going to use that swing high. I'm going to use the top upper Bollinger Band. And then as support comes the 50, and the second one will be that lower Bollinger Band. It's a pretty wide range for support, but again, Bitcoin does fluctuate by thousands. So especially, I'm actually, the reason that I'm doing that is because I'm looking at this and saying that Bitcoin most likely will continue to receive pressure as gold also continues to move lower and the dollar index spikes. So the euro actually broke that 118, fluctuating below, way below that. It made a pretty strong swing low. So 117 is going to be that level of support. I'm going to use that 50-day moving average where the market actually bounce off of, and then the upper Bollinger Band. So speculation for the euro to stay around 117.5. The pound, after being pounded pretty strongly, and let's just use the upper Bollinger Band, and the 50 is above the upper Bollinger Band. So showing us great momentum to the downside, being favored. So I'm gonna actually use a swing low, 136 psychological level of support, and then 135.5. Let's see if you could probably see the pound just sideways trading, choppiness. Now, if we do see the dollar index makes another leg high or higher leg, as it did today by the news, then we'll continue to see slide on the currencies and the metals. That's it for today. Have a great weekend. Tomorrow is holiday, so we won't be doing any recording. So see you Monday.